Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. In this video, I will be speaking about AUDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing and rejecting to the upside a quite strong historical monthly support and demand area. From here, in fact, all this previous move to the upside was created. Again, here, the market tested the area and rejected it to the upside. Again, here, tested and rejected. And just now, the market is testing again the exact same zone, is currently rejecting it to the upside. And in a situation like this, more bullish price action could be expected away from this area, as already happened in the past when the market was testing the exact same zone. If we move closer and look at the most recent price action, what we can also notice is that now the market has just broken structure to the upside. This zone was acting as previous monthly resistance from which all this push to the downside was created. Then the market broke above the zone and this previous resistance is now turned support. And as the market is testing this previous resistance turn support, there is definitely the possibility of seeing some bullish price action being created away from this area. We can also notice that we just had a strong impulse followed by a correction. So from a pattern standpoint, if we want to measure this correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a perfect 0.32 retracement lining up exactly with this previous resistance turn support. Now this creates a confluence of support inside of this area. And when you have a confluence of support zone, you have an increased probability of seeing institutional longing inside of this area, which at that point further increasing the probabilities of a potential rejection to the upside away from this zone. Now, let's keep all of this in mind because we will be speaking about institutional longing in just a few minutes. And for now, let's drop that on the weekly time frame and see what we have. Now, from a weekly standpoint, we can notice how the market has been creating a series of higher highs and higher lows. We had the first high here, higher low here, now a new higher high, and we have the possibility of creating a higher low at this level, from which then there is a possibility of seeing yet another higher high be created. We can also notice that from a pattern standpoint, also here we have an impulse and correction. So if we want to measure this correction, we have to take our Fibonacci from the low to the high of the impulse leg, which shows us how at the moment we are between the 0.618 and the 0.786 Fibonacci retracement, which is essentially the last retracement zone inside of which the market can create a higher low. If the market drops below this, at that point, there is a possibility of creating a new lower low. So at this point, that would not be a correction anymore. So it's very important that the market, if it wants to create a higher low, creates such higher low inside of this zone. So also here, let's keep all of this in mind and drop down on the daily time frame. Now, before we dig deeper into what we have here from a technical perspective on the daily time frame, first, let's go and see what the non-commercials in the market are doing. So essentially the big players in the market. Now, if we're looking at the data for the AUD, the first thing to keep in mind is that AUD, if we're looking at the data for the AUD, already means we're looking at AUDUSD because all currencies on the spot are traded against the USD. And what we can see here is that with the last reports, net positions have been massively increased. We went from minus 40.1k net positions up to plus 14.5k net positions, showing a clear increase of the net positioning with, in fact, seeing 19.5k longs added on AUDUSD just with the last report and 6.2k shorts getting closed. So institutions are moving aggressively back to the bullish side for AUDUSD, therefore making it stronger. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So in a situation like this, from a daily perspective on the technical side, we can notice how increasing this move to the downside, the market has also printed this M pattern. And in general, after the creation of an M pattern, what you would expect is for the market to create a rejection to the upside, potentially completing the M pattern at the neckline, but anyway, creating a correction at least to the 0.32 of the Fibonacci taken on the impulse leg. That is what, in my opinion, is the usual reaction of the market to such a pattern. In fact, if we look in the past, we can see already here an example of an M pattern. After that, the market created a push to the upside and completed it at the neckline. Again, here we had the creation of this M pattern. The market followed with the completion at the neckline. So it's not every time, but when there is such a pattern, in my experience, there is an increased probability of seeing a potential rejection to the upside. Now, since we already know that institutions have in fact been moving to the bullish side for AUDUSD, specifically the non-commercials in the market, that increases the probabilities of a potential rejection to the upside and for a retracement at least to the 0.382 of the Fibonacci taken on the impulse leg. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside for the market to retrace at least to the 0.32 of the Fibonacci taken on the impulse leg. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete mentorship program ever that I have created. You have the possibility to gain access to all the courses, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me, the COT data software that you see me use in all these videos. And if you continue to scroll down the website, past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out. The link is in description and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below and I will see you in my next video.